Reuters is telling us that we're gonna get the reciprocal tariffs on Wednesday. Other outlets are saying by Thursday. I don't know if I believe Reuters are the one that's told us that the tariffs were going to be delayed before, which wasn't true. Other news outlets are reporting that it could come by Thursday, so like it could come later on Wednesday or Thursday. Not sure that we could see the market react to this. We'll be watching this closely. CNBC is reporting that it could happen before the president meets with the Prime Minister of India on Thursday. We'll see what happens. By the way, those tariffs could be announced and directed at the EU. Don't know who, they haven't said, but again, I think it's likely. Already responding to the steel tariffs and saying they're going to do countermeasures. Now, I'll continue to point out that tariffs and the VAT tax and all these other things that involved on U.S. imports into Europe end up being higher than what the United States is charging them. So, I mean, if they want the tariffs to go away, all they got to do is just remove all this stuff. The United States is trying to level the playing field, apparently. I'm not a fan of tariffs, but the tariffs on U.S. imports are higher than what the tariffs are for European goods going into the United States. I'm only saying that because Europe is, the European Union is saying that the tariffs are unjust. Well, all they got to do is remove their tariffs and this whole thing will go away. The tariffs on cars, 10%. You got this VAT tax and everything else going on. Imported cars from Europe going into the United States, 2.5%. And I'm not a fan of tariffs. I'm not a fan of it when the European Union does it. I'm not a fan of it when the United States does it. Europe's feigning outrage, and the tariffs for the U.S. products are worse. Pose more egregious tariffs on the United States than what the United States does to the European goods. I like it when either one of them do tariffs, but again, this is what it is. This is likely to eventually lead to an inflation freakout. We're starting to see that now with the inflation data, as I've been warning you. I think the tariffs are added to that. Wall Street believes they cause inflation, which I've proved to you. If you watched my weekend video last weekend, I showed you the tariffs don't cause inflation. I don't like tariffs, but I'm not going to pretend that they cause inflation when they don't. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel. If you could take a moment to do that, I would really, really appreciate it. Most YouTube channels make their money by getting sponsors and selling you stuff. I don't choose to do that. I just ask that you partner with me and take a moment and support the channel today. It takes a lot of time and effort to do this. So if you can respond to that, I would really, really appreciate it. Follow the link below to take you to a secured site and you can donate any amount you want. A recurring donation, if you do that, I thank you. But please consider helping out today. Thank you. Warning you, we're going to get a jump back up in the 10-year yield. Fed has been cutting. It's been going higher. Why? Because concerns about the massive national debt, concerns about inflation. Well, the Fed has been cutting short-term rates with the Fed funds rate. The longer-term yields have been rising sharply. And I told you to be watching this. Do we end up getting a bounce here off the 50, which we ended up doing? We dropped below it. We got back above it. Or did we go down to the 200 and then we rebound? We're getting the bounce off the 50 that I talked about. Talked about both of those scenarios. Now I'm talking about two other scenarios. Do we get a lower high and then resume the decline, or do we come up here and go beyond this level and come up here and try to get a double top into this area over here? So that's what I'm watching next. And again, actually this is going to go down because we're going to have a recession and see the longer term yields drop. We'll see 3-year mortgage rates begin to drop. But again, see the market peak. It's sell off. It's going to drop 20%. The Fed will panic. Start seeing cracks in the economy. There'll be an inflation freakout. The Fed will still do emergency cuts. The market will celebrate. We'll have a 20% sell off. The Fed will do an emergency cut. The market will celebrate. But it'll be a counter trend rally. And then the bottom is going to fall out of the stock market. Yields jumping back up with the inflation data. I told you to be watching for that to see if that happened with the inflation data we got this week. Or I told you if it came in cool, we could see a test of this level and see it jump back up with concerns about tariffs or something else like that. So again, it is jumping back up with the inflation data. We'll see if we get a lower high now or if we get a higher high. I told you we are going to see a jump in the inflation data. I've been telling you that for a couple months. It's going to turn up. But again, I think they've been artificially keeping it down. BLS is the one that puts this stuff out. They're the same people that put out the fake jobs numbers. Okay, so again, I believe a word these people say. They put out data trying to shape public opinion rather than telling us the truth of what's going on with the economy. Surprise, surprise. Oh, inflation jumps. Largest monthly increase that we've had in a year and a half since August of 2023. Inflation jumping back up to 3%. Again, I knew that inflation was going to go higher because the money supply is increasing. That's real inflation. That's telling us that the inflation data is going to go higher. They've been likely artificially manipulating the numbers ahead of the election, and now we're starting to see that. Just as they manipulated numbers ahead of the election to make the jobs data, overestimating the jobs, and to make the inflation look better ahead of the election, now they're probably going to go in the opposite direction, manipulate things in the other way. These people are a piece of work over there at BLS. Rather than telling us what's going on with the economy, they're trying to shape public opinion. Oh, the economy is great in 2024. 2025, now it's bad. These people are absolutely incredible over at BLS. I've been predicting that the inflation was going to turn back up. I have a recession. It's going to be an inflation scare. We're starting to see a preview of coming attraction. This is now getting a preview of coming attractions right now. Narrative everywhere. Oh, it's the tariffs. The tariffs haven't even been implemented. We got the tariffs on steel and aluminum there on Monday evening. The tariffs for Mexico and Canada have been paused. The only thing we have is a 10% tariff on China. It hasn't been in place to be reflected long enough to be reflected in any data. And even if it was, again, tariffs don't cause inflation. Prices rise one time, but it acts as a consumption tax. It doesn't cause inflation. People run around all over the internet over here warning the inflation is now is coming, and it's because of the tariffs. The tariffs haven't been implemented. Absolutely incredible. I like the tariffs again, but they certainly don't cause inflation. This is what's eventually going to give the market the freak out, the inflation freak out that I keep predicting is coming. As I predicted, the inflation would rise. Here it is. Told you it would happen. We're seeing an uptick on both the core and the headline number here to 3% there. The headline number and 3.3% for the core CPI data. And the largest increase in a year and a half on a month-over-month basis, 0.5%, is supposed to come in at 0.3%. It's higher than the previous month's reading. The core month-over-month came in higher at 4. It was expected to come in at 0.3, and that's higher than the previous reading as well. The year-over-year data also increased. It was supposed to come in at 2.8. It was supposed to be lower than the 2.9 previously, came in at 3% above the previous reading and missing the mark, missing expectations on the estimate. The core year over year came in also hotter than expected, 3.3. It was supposed to come in at 3.1 above the estimate there, and that's higher than the 3.2. So it was supposed to come in lower. It came in hotter. So again, I expect we're going to see the inflation go up. I think we'll either see closer to real data, or they'll make it even worse than it is because these people at BLS manipulate numbers and they lie constantly about the economic data. That's what they do. Regardless, recession indicators were already flashed long before the election happened, long before the tariffs. That's why I continue to say we're going to have a recession. There's going to be an inflation freakout. We're going to start now seeing probably numbers that are closer to what they really are, or making the numbers, manipulating the numbers and making them even worse than they are. Whatever the case may be, inflation's going higher. Fed's still going to cut. The narrative is the Fed is not going to cut. CEO of B of A coming out and saying that this week now. We had the pause out of the Fed in January, and expectations now is we're going to have a pause until October. And maybe we get a cut in October or December, that we get one more cut of 25 basis points this year, or maybe that spills over and it goes on into 2026, where we might get another cut in 2026. So right now, the expectations is over the next 2 years, we're only going to get two more cuts because inflation's bad and it's going to just even worse because we're going to have the tariffs. And again, we had the tariffs in 2018. What happened to inflation? It went down in 2018 and 19. What happened to the inflation of the 1920s and 30s? We had 40% tariffs and inflation was low, and we actually had deflation going on. Points in the 20s and the biggest deflationary period in the 1930s. In this myth that the tariffs cause inflation, but this is the expectations that Wall Street is now expecting this high inflation, which I've been predicting the CPI was going to eventually rise. Gee, it's now happening. Surprise, surprise. Again, I think this will lead to an inflation freakout as the CPI continues to rise. Concerns about a trade war. Actually, we're going to see cracks in the economy. Maybe actually now get some real data. This can change with the tariffs. This could go, again, we've seen it go from one to none, none to one to two. Now the probability of getting one cut in 2025 is below 50% there in October and December at the October-December meeting. And everybody believes that we're now going to have this inflation, so the Fed can't cut. Betting markets believe that here. Bond market believes that as we're seeing the yields soar back up today, and it's been soaring ever since the Fed began to cut. You listen to Powell, again, Powell and the Fed, they believe that inflation is a major risk right now. I think Powell's really concerned about the tariffs. Tried to dodge the questions about it the last 2 days and at his congressional testimony hearing here. Listen to him. He's concerned about it, and the Fed is second-guessing. That's why they keep saying we're in a good place, and they're pausing, making another monetary policy mistake. Futures sold off dramatically with the CPI report ahead of the market being opened about an hour before it opened there, and gapped lower, and then we recovered, moving back to try to fill the gap. I'm watching that gap closely as we're about to get the new tariffs announced either Wednesday or maybe on into Thursday. Dow was down 225 points, down 0.5%. The S&P was down just over 0.25%, 2.27% down, 16.5 points, still holding above 6,000 area. NASDAQ was flat. It squeezed out a gain there. The Russell was down 0.87%, and the VIX, amazingly enough, was also down 0.81%. Interesting. And the S&P was down just about 16.5 points. It was down just over 0.25%. We had this nasty gap lower, had a bottoming tail there right at the open, and then we recovered, attempted to recover the rest of the session to try to move back to fill the gap, to test the 200 period. That's the black line you see right here. Again, we gapped lower. The 50 dropped below the 200. It's still below the 200, but we're attempting to rebound. We rebounded. We formed this rising wedge going into just over the 200 period, but not reaching the gap fill at 6,069. We were just shy of that level. Not reach it, that might be it. But it is possible that the rising wedge breakdown could possibly be forming a larger bear flag pattern. We did have another trend line right here. If you connect this low and this low right here, right there, but that trend line broke. That could have been a larger rising wedge, but the trend line broke. A larger rising wedge, possibly if we can get back above the 200 period. Again, you might come back up in this area, back up to test these highs from the previous day. Do that, and then we get the announcement of the tariffs. That could rattle the market further. Going to be watching now this low to see if we attempt to take it out or not, which is our low, our gap lower today. But that's what happened. Gap lower, went back to the 200. We got a reaction off of it. And then we pulled back, bounced off the 50, went back to the 200 again for a test, got rejection at it again, and then have now come back. Possible parallel trend line with this upper boundary and our cloud of support. We'll see what happens here. Moves slightly lower than this lower here. You have a possible divergence developing on the MACD. If it can firm up at the center line, if it goes negative, you get a bigger dump. We'll be watching to see how it unfolds. but warning you about a bigger sell-off to go back and test the tariff low sell-off from a week and a half ago. Again, I've told you I thought we would get a bigger pullback. I told you I could be wrong. We just may get a shallow pullback right here with the rising wedge breaking down, but I told you I thought we'd end up getting a bigger pullback. But I've told you I don't know if we take this low out and we're getting that bigger pullback maybe now here, and maybe we just get a higher low here above this tariff sell-off low right here. Maybe we go a little bit lower and get a larger Fibonacci retracement. Maybe the pullback isn't done with this low right here, and maybe we go to the 61.8 Fibonacci right here at 59.09, or maybe again to try to fill the CPI gap from the previous month at 58.43 and possibly reach at 58.49 or 78.6 Fibonacci, not seen here. I've been watching these levels closely, but right now we're turning off of the trend line right here. That's pretty much doing the same thing. So again, we are getting that pullback, and again, back over here, I told you we were going to get a pullback to back test. We've had that. The question is it done? So again, look, I believe that we have these first two waves of minor wave 5, and I believe these subwaves are wave 1 and 2. Now, maybe 2 isn't done yet. But again, well, I told you, hey, we're going to bottom around that trend line, the 2023 trend line, and fill the gap. The election down here, I told you that on the 9th and 10th. I was pretty sure that we were going to bottom that following week, and I told you that. We were going to rally. That happened. I told you over here we're going to pull back to this trend line and back test it. That happened. I was pretty sure. And when we rallied right here, I told you we were still going to end up moving below this low. That happened. Here, again, I like to tell you what I think. I'm not sure right here. I don't know. I don't know if we're just getting a higher low, pull back for a higher low, and already begun the subwave 3 in minor wave 5, or if subwave 2 isn't done yet. And that's why I have the question mark there with that. So again, I'm watching this closely. Do we get a larger Fibonacci retracement? We've already gotten the back test I predicted. I'm predicting we're going to go to make new highs, but I am not certain if this low is going to be taken out or not. If we do take it out, we have the trend line from the 2023 low, as I've talked about, that we may end up tagging. Again, I'm showing you the information. The 50 is still above the 200. Again, we're holding above the 200. We got a bottoming tail there. Again, you got the gap fill at 6,069 directly overhead here if we try to fill that, but we're going to be watching. Do we come back down? End up getting a bigger Fibonacci retracement. I told you over here, when we had this low right here, we were bouncing off the 200 and we rallied up. The intraday signals told us that was going to happen. And when we got up here, I told you, hey, we're forming a bear flag and we're going to come back and take out this low. That was correct. Deep seek sell-off here. We had the tariff sell-off here, and we started to get that with that bear flag forming that day on that Friday before they were announced on February 1st. The White House press secretary confirmed that we were going to get those, and the market sold off on that announcement from the press secretary. Now we've had this rising wedge back up, and the breakdown, are we just getting a throwback towards the breakdown here with a lower high and going to resume the decline? So we'll be watching to see how this unfolds. But again, when this is done, I think we're going to go make a new high. Whether it is done remains to be seen. And like I said, again, I think you're either coming back here to get a higher low or you're going to get a lower low. And we'll see if that completes here or at a little bit lower levels, or do we try to take out this low from the tariff sell-off previously surrounding the tariffs announced on Mexico and Canada. So we're watching this closely, but I do believe it is just a pullback, and I just don't know if it's done right here or not. So I'm looking for clues just like you are, but I was pretty certain about the bottom and the rally, and I was pretty certain about the pullback here that was going to happen, and that was correct. I'm not so certain about this, whether we're going to get a higher low or a lower low here. Divergences have done a really, really nice job in marking our turns. We talked about it at the December high, and remember we had the Dow peaked right ahead of the S&P and Russell, and again we went sideways on the S&P, and then we got the breakdown here, and that's given us a bigger sell-off. Those signals were correct. The bottoming signals of multiple point divergences were correct. Are we getting that again right here? Do we end up seeing a multiple point divergence? Go up on the RSI. These peaks were correct. The peak here, the peak over here. The divergences have been really very, very helpful on the 5-minute or on the 60-minute chart here. Again, we've had this divergence. Maybe that's it, but my Concern here is that we would go down and get another reference point of a divergence and then resume the advance. So got to be watching that, and especially since we never did move into the golden pocket. We don't have to move into the golden pocket, which is the 61.8 Fibonacci to 78.6 Fibonacci, but oftentimes that is the case. So again, just something worth paying attention to. Volatility, I told you that I thought would still happen, seems to be happening. I continue to warn about testing this low. We'll see if we take it out or not. That is the part I'm not sure about. We're testing the 50-period moving average and doing that. So again, possibly we're just getting a more shallow pullback. We'll be watching for clues. But again, I've drawn the two scenarios. One is that we bottomed right here. The other is that we're going to sell off back to the trend line in the 100-period moving average and then bottom out and maybe go closer to this level or even take it out if we try to hit the trend line from the 2023 low. We bounced off of that in January. We were going to come back and fill the gap from the election right here and likely tag that trend line, and we did. Looking for that bottom the following week on January 9th and 10th. It happened. So do we do it again here, or is that it? And we're just, getting a more mild pullback, and then we're going to resume the advance. Over here, we had the more dramatic pullbacks with DeepSeek and the tariff sell-off. Do we just get this higher low now and resume the advance? Again, I think we're coming up to this trend line, but I don't know, and that's why I've drawn both scenarios in here. I don't know if we get the bigger pullback to the trend line again in the 100. Again, the Bitcoin ETF pullback more than the S&P 500. Does the S&P follow? P got less of a pullback. I don't know. They had this positive correlation. Does the S&P end up getting a bigger pullback? We'll see what happens. But regardless, I think eventually we can come up here. What could do that? Maybe the tax cuts. That's what the market rallied on over here with the election. Maybe hopes of calming down with the tariffs. Maybe deals being worked out. Maybe tariffs are announced and then a pause for negotiations is announced, much like what we saw Mexico and Canada. Watching to see how all of this unfolds, but again, don't think the top is in yet, and I do believe that we're just in a pullback, as I've been warning. I believe that we're minor wave 5. I believe minor wave 4 is here. We have the wave 1, and the wave 2 may be done. Maybe it's over here, and there's more work to be done. Maybe it's a complex correction. Eventually, I think we're headed up to this trend line right here, and that's where I think we're eventually going. RSI continues to float right there at the 50 level as we're just kind of going sideways here. Stochastic's trying to turn back up after turning down previously earlier in the week, now trying to turn back up. Does the MACD roll over and we end up getting a little divergence, maybe hitting that trend line and moving slightly lower, possibly confirming a higher low? Or again, like I said, maybe we just get a more shallow pullback, and I'm just uncertain if we'll get a higher low or lower low here. I just want to make that perfectly clear. Remain bullish in that I believe that we're going to go higher. Then I think we're going to top. And then I think you're going to see, once we get up here, you're going to see a 20% sell-off real fast. That's where I think you're going to see the massive inflation freakout. We have those tariffs that have been paused. Do they remain that way? More concerns about a trade war. How do we start seeing further nail-biting surrounding the new tariffs on China and retaliatory tariffs, as well as tariffs that could be directed at the EU? We'll be watching. I'll just show you my other 60-minute chart here real fast because I just want to show you the golden pocket here. This is the area I'm looking at. Should we take out this low right here? Predicting that we'd fill this gap at 59.38 to backtest. We did do that. That might be the bottom, but if we get a larger Fibonacci retracement, more volatility, inflation concerns, so we had that report out of Michigan showing inflation expectations jumping, 1-year expectations jumping, more concerns. We still might see more volatility, but I'm looking at this area again, 78.6 Fibonacci, 58.49, 61.8 Fibonacci, 59.09, our gap fill from the CPI, 58.43. Just looking at these levels closely. Just quickly, I just want to show you these support levels with VWAP support, horizontal support. If we end up getting a bigger sell-off and touching this trend line, the upper boundary, the bull flag again, then again, it might take us into the golden pocket somewhere. Like I said, I don't know that we're doing that right now. We're trying to bounce off the VWAP support right here. which is the low, the November low just before the election rally, and the low that we got with the Fed sell-off, downsizing the amount of rate cuts for 2025. We got the hanging man candlestick. It got confirmed, but there's been no follow-through. The candlestick is meaningless unless you get confirmation and a follow-through. Both. There's been no follow-through. We tried to follow through today at the lows, but we didn't close there. We rebounded. You got to close below this low right here. We didn't do it. We gapped down, went lower, and then rebounded back up on the S&P 500. So moving back to try to fill the gap. So we're going to be watching. We take out these VWAP support levels, and if so, then these other levels come into play. The VWAP, longer-term VWAPs, this, I believe here is from the August low right here, which is just below our 61.8, a point of interest. VWAP is the volume-weighted average price. You anchor it from a point, and it gives you the average volume-weighted average price from the point, from the reference point. We got that hanging man, we got a confirmation, but no follow through. But while we got that hanging man and the confirmation, it didn't flip the momentum back to bearish. We tried to do it again today and we couldn't do it on the S&P 500. We're trying to bounce off our 50-period moving average. So again, if we can get traction here, then maybe we just get more of a shallow pullback and go on our way. But if we have more volatility, I'm looking at these other levels, these Fibonacci retracements. Let me just move it over here so you can see them real fast. Did get a red bar on the awesome oscillator today. So again, we'll be watching to see what happens here. We dropped below the 10 period and we rallied up and we stalled right at it. So again, we've got green. Do we flip it back to red? Do we get rejection at the 10 period? Or is this just a shallow pullback? We'll be watching, but you did get the red here on the awesome oscillator here in the daily time frame. Momentum has really just been going back and forth as we're kind of in this trading range since the November rally. You got green, you got red, you got green, more red, now green. We'll be watching to see what happens. And I predicted a pullback. I'm just not sure if it's done right here or not. One reason why I think we're still going to new highs is because we still have the green going on here in the weekly time frame. We saw that happen with the bounce off the 2023 trend line. I told you we get a rally ahead of Inauguration Day. We got that I thought would be a continuation of the election rally. I think that's been proven to be correct. I think this is likely going to remain, and I think, again, we're going sideways. And, again, we've really just gone nowhere real fast here over the last several weeks here, but you're getting the green bars on the awesome oscillator. So I think that is suggesting that we're going to break to the upside out of this consolidation eventually, and I think you're going to end up forming a divergence going forward here in the more recent price action with our December high. It moved slightly higher in January. I don't think the move's done myself, but this is causing me to believe that, again, we're likely going to get that one more reference point of a bearish divergence here in the weekly time frame. This is the Spiders weekly chart here. But the S&P bounced beautifully off that 2023 trend line at the January low. That's why I was expecting that January bottom. The question is, do we hit the trend line again? But eventually, again, I think we're coming up to this upper boundary. This is the rising wedge pattern that I think is developing in the larger channel in the weekly time frame, which is right here. And again, I believe that we're in this minor wave 5. Maybe we're done tagging that 20-week moving average. Maybe we don't hit the trend line again. We tagged it last week at the low. Maybe that's it. We're going to bounce off the 20-week now. But I think we're going into this upper trend line and this upper channel line. And again, this may take longer to reach that level. If it takes longer here, then we're going to go higher. The target would be a higher level. If we reach it sooner rather than later, then it will be lower. But this is where I think we're going. The trend line is my target, not a number. I still think we reached that level. I think we're bouncing off our 2023 trend line, and I think we'll end up getting rejection off of this trend line of the channel and the upper boundary of the rising wedge. And I think we'll see an inflation freak out get there, and I think that this is a preview of coming attractions, and I think the inflation data is going to tick back up. I think the tariffs will eventually freak the market out. Concerns of more inflation. I think the concern is we're going to start seeing weaker economic data now, likely evidence that things are starting to fall apart. Again, 2024, The government ran a $2.2 trillion deficit in deficit spending. It's going to make inflation go back up. It's not going to be the tariffs. Fed policies, well, they always lead to inflation. Eventually, we'll see the market peak, a 20% drop, moving back to this trend line, and the Fed is going to panic and freak out. Recession that they're telling us we're not going to have, but I think we go up here. I don't think the top is in. I think this is just a pullback. I remain bullish in the weekly time frame here, believing we're going to go to that trend line. Part of the rally today was hopes of negotiations for ending the Russia-Ukraine war. We have that gap, so we'll be watching it. NASDAQ went back and filled the gap, ended up 0.12%, and we ended up about 26 points or so. Again, this trend line continues to be where prices are stalling. So again, do we go back and we test these lows? Now remember, NASDAQ got a higher low, so this could be a bottom for the S&P. When we had the DeepSeek sell-off, the tariff sell-off, we got a higher low with it, and the S&P moved to a lower low. They diverged, as they often do at bottom. So that's what I'm saying. We might have a bottom at the tariff sell-off lows and either get a shallow pullback or a deeper pullback, but not take out these lows. We'll be watching. Now, if NASDAQ does end up getting a bigger sell-off, because again, it could stop making new highs, if that topping tail in the monthly time frame for December, in the monthly time frame, if that plays out, going sideways, and eventually those candlesticks on the monthly chart for QQQ and NASDAQ, eventually those could be confirmed. We have this gap fill down over here, which is from the CPI rally the last month. And then if we end up taking that level out, should we lose these lows, you have the election gap fill right here at 20,227. And if NASDAQ goes lower, we've got this trend line from the August low to the low right here in January. Again, we may reach that level and try to bounce. The 100 period's just below it. We're right at the 50-period moving average right now. So is the S&P 500. If we try to bounce immediately, and that's it, the pullback's done. NASDAQ tries to go to new highs. I'll be watching the upper channel here. I'll be watching if we cancel out that monthly topping tail, or does it mean something? Does the December high hold? Remember, NASDAQ moved to a new high in January. S&P moved to a new high. NASDAQ did not.